I don't know about you guys, but my portfolio is 100% for in US stocks and Canadian stocks. And today we're going to be talking about an Indian bank, HDB, the largest bank in India, and it might be a really good opportunity for us to diversify into a different market, and not just any market, the largest growing country by GDP. And if you look at this, America, good old America is growing at 2% GDP growth, while India is growing at 7%. So India is growing really fast, and their middle class is growing really fast, and a lot more people in India are making more money. And what do you do when you make money? First off, the money goes into the bank, and then you get the option to buy a house, to buy a car, to get loans, to buy purchases. So when we're talking about buying a home, so this company is going through a bad time right now because they just went through an acquisition where they bought the biggest house mortgage bank in India. We're talking about HDFC Bank, Housing Development Finance Corporation, India's biggest mortgage lender. So they bought it in a 40 billion all stock deal. And if you look at HDB, it's comprised of multiple different banks that they acquired over time. And I'm really bullish on the stock because I'm bullish on the country, and the stock is growing phenomenally. If you look at the growth that they've had, it's insane. And if you look at the earnings they have, it's crazy. If you look at these numbers are in rupees. So if you compare it in the last 12 months, they had about 34 billion dollars in revenue and $8 billion in earnings. And their market cap is at $150 billion, and their earnings will go up. And if you look at the analysis, because when the merger happens, what happens when two big companies merge is because the balance sheet is all over the place. So that's where they have slowed down growth. They slowed down the deposit in the last couple of quarters because they're still processing and getting everyone on the same page, and that before they can continue in the growth that they've had before. And they still are growing, don't get me wrong. But just listen, the first thing they said in the Q2 earnings call is that they are not happy with the numbers, which I like to see because if I'm not happy with the numbers, they shouldn't be. And they're working on fixing them. So for next year, they are projected to grow their earnings per share by 50% and their revenue by 15%. And one thing I like to do is if you compare this to the SPY, see how well you would have done if you invested in HDB rather than the S&P 500. Since 2004, you would be up 2,300%. So that's a 23x. Well, if you invested in the SPY, you would be up 4x. So that's why it's nice to look at investing into different countries, because America is not the only country that is growing. It is not the country that is growing the fastest. So the stock is trading at a 18, 19 price to earnings ratio. They do have a nice dividend of 1.2%. And to pay off the dividends, they only use 21% of the earnings to pay the dividends, which is nice. This is a very profitable company, a huge company. And they did cut off their dividends in 2020 when COVID happened, the pandemic. But they are back to growing fast. And then couple other things I want to mention. I don't want to make this a boring video, guys, and there will be more videos about this stock coming soon because I'm really passionate about the stock, and I do plan on making a big portion of adding it to my portfolio. So they have partnerships. They have partnerships with TD Bank in Canada. They have the partnerships since 2015, and it is for simplifying banking services for Indian students based in Canada. The company has $477 billion in assets. They have 50 billion market cap, and they also have 420 billion in liabilities. And we're going to get into a red flag, which is the shares outstanding. They are diluting the shareholders, but they only did it once where they raised 35% of the shares. We're going to look at that in 1 second. If you look at the institutional holdings, only 13%, zero insider holdings, and they're trading at 1.8 book value, 18 price to earnings. They do have a bunch of cash, 1.9 trillion. It's about $200 billion in American. 8 rupees is $1. So they do have a bunch of cash that they're sitting on. This is a safe bet. This is not something that has a lot of volatility. And we can see that when we zoom out 5 years, they're sitting at the same price they were 5 years ago. And if you look how they've been growing a lot more than zero. So that's why I do think for the next 10 years, this is not a short-term hold. This is not a trade. This is more of a long-term investment in HDB. And if you look at who holds these banks, and yeah, right, there's a couple things I want to get into. So Warren Buffett has been asked about investing in India, and he said there's unexplored opportunities. And if you look at what Wall Street says, the Wall Street says that 2 decades after betting on China is the world's biggest growth story, Wall Street giants like Goldman Sachs and Morgan Stanley, the largest banks in the world, are endorsing India as the prime investment destination over the next decade. So I'm not the only one that thinks that India is going to keep growing the way they're growing. And right, so this is the merger. We talked about it. If you look at the earnings, we can see that they have 95 million subscribers. If you look at page 11, Can we do this? Yes, we can. Awesome. So just in the last quarter, they added 2 million members. So they have 95 million members of the bank. So credit cards, house mortgages, auto plans. There's a bunch of different products they have. And these consumers over time will explore the different products and make the bank some money. So if you look at the ownership, insider buying and selling, we only see buying really. Only Fidelity has sold 9% in the beginning of 2024, but they still hold 1.2% of the company. Vanguard also owns 2.3% of the company. Life Insurance Corporation of India. Another thing they do is they're in the insurance business, so they do sell insurance. So I believe this could be them owning themselves, owning 4% of the stocks. And we only see buying. If you look at the insider trade transactions, there is selling. But if you look at this, right here, 5,000 shares sold, but the person holds 140,000 shares. So no big selling. The company is very healthy, growing very nicely. And then if we can take right here, look at the diluted shares holding. In 2023, when they completed the merger, they raised 30% of the shares. They went from 5.6 billion shares outstanding to 7.6. So I believe this is the money they raised just to kind of sort everything out, get everyone paid, and make their balance sheet look a little cleaner. So overall, I am very bullish on the company. I think right now it is at a decent price to buy. If you look at the chart. So yeah, they did beat the SPY. They have a lot of customers. It's a growing country that this company is a part of. And you can see they don't have much volume. Why is this? So how much volume did they have? $4 million in volume. Okay, that's not bad. So right now they're up. It's 4:36 p.m., but they're in a different time zone. So the market is up and they are up 1.7%. They have a nice gap right here that they could fill, which is from 60 to 66, 64. But they also have a bunch of gaps down here to fill. But overall, the company has been growing amazingly when the share price hasn't. And I'm very bullish on the company. And if you are, let me know if you guys are interested in seeing more videos about this company. Thank you guys very much for watching and have a great day. And peace.